Good morning. It's Monday, May 13th, about 6 a.m. Central Time. Overnight, we see some carryover profit taking from Friday's explosive rally. Remember, we got to trade the markets we're in, not the markets we want. So we do have a bit of a correction going on here in the precious metals overnight. The recent weakness in the two jobs reports that came out, non-farm payroll at 175,000 and initial claims at 231,000, followed by improved economic conditions in China, are what really propelled prices higher on Thursday and Friday. Now that setback in this profit taken here, I expect we're going to continue to see this level of volatility across many different asset classes. Now this week we have some crucial events lined up here. We've got Fed Chairman Jerome Powell. He's scheduled to speak on Tuesday, which will be followed by the release of the PPI data. On Wednesday, we'll see another release of CPI data, and these events could really shape the market. Now, while I anticipate that the Fed is going to make its first interest rate cut in September, they're looking at about 50 basis points. So September and probably December are the ones in play. We don't, according to the CME Fed Watch tool, see much of a chance of an interest rate cut prior to that in June or even closer to the election time. So the two significant levels we're going to be watching on the S&P 500 are going to be the support level 5210. Remember, we were playing that as our resistance points for a while, and then also below that 5190, which many of you are working some profit targets back at the downside, which corresponds with the 50-day moving average. A stronger CPI data could lead to another correction down to about 5150, down to 5140, and if we make it through CPI unscathed, we could see this big reversal and price go up to about 5330. Now, pushing on to the crude oil market, we have supportive action in the overnight, and geopolitics continues to be the root cause, the significant root cause of the volatility with the recent escalation of Israel and operations expanding into Rafah. There are two key pivot points that I'm watching on July crude oil. The first is $78, which we're slightly above. We could see a move back up to about $80.50, while a break below $76.50 could be a washout down to about $75. Now, getting into the gold and silver markets, our favorite two markets here. Again, gold under pressure, about down $29 overnight. And it was encouraging to see an extension higher on the charts. And it was impressive and strong in wake of a stronger dollar, and also impressive in wake of strong 2-year treasury yields. I do anticipate there was some rotation out of the gold and the silver market on Friday, where traders were trying to chase those U.S. equity prices higher from Thursday and into Friday here in that market. Now, if you look at the latest commitment and traders reports, gold net longs are about 253,000. The silver net longs are about 70,000, which brings us back closer to these post-pandemic near record highs. So that's why you're seeing quite a bit of volatility in these markets. People are just coming into there and they're just piling into those markets here. So it's got additional speculative momentum coming into those markets. Now, traders are going to want to keep an eye on a few different levels here in the gold market. One, we want to see a move back over 2375 on the gold. If we get that move above there, those recent speculators are going to continue to add to their positions, should push prices back up to 2400, and then we can make another move for all-time highs at 2448. Now, the line in the sand on the gold market is going to be pocket support 2293 down to 2285. We get this break back into 22 below that 2300 level, you're going to see a lot of people liquidate and go to the side. When we go below 2285, the short sellers come in and push that market down as well, and the stop losses are all going to be cleaned out. So we don't want to see a move back below there. If we get the move over 2375, there's a lot of other things. We're going to draw in a lot of speculators. You'll see ETF holdings increase. You'll also see people that play just specific technical setups. You'll see the MACD on the positive side, and you also see stochastics continuing to push higher. Now, silver has also triggered some bullish momentum and looks a bit more constructive than the gold market, given the gold-silver ratio back at about 82 to 1. Remember, we were seeing 85, 86 to 1, getting a little long in the tooth here with that separation between gold and silver here last week, and that all snapped back here together because of silver's high beta nature. Now, the move you want to see on silver, 28.50, so we're not that far away. 28.36, we're down about 14 cents. We can get into some positive territory and get that close above. You're going to see people continue to add to those positions, those ETF longs here, and it could spark an additional wave of buying. The line in the sand for the silver market, 26.89. We take this out, we break below there, it's going to lead to a larger correction, a larger washout. So keep your head on a swivel. You got any questions, reach out to me, 312-858-7303, or shoot me a text message. You can also email me at phil@BlueLionFutures. And if you got any questions on futures option trading, give me a call, 312-858-7303. Love to talk to you. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.